All right, everyone. So I think we'll go ahead and get started. Thank you all for taking some time out of your day to learn more about PA's Beginning Farmer Tax Credit Program and for using this opportunity to share your feedback about the program. We're excited to be able to host this event today in partnership with a few organizations. So this event is brought to you by PASA. We are a nonprofit organization that administers farmer training, research, policy, peer education, local food programs. We are also a network of tens of thousands of farmers, food system professionals, and change makers working together to advance regenerative and equitable agriculture at our home in our own communities. And you can learn more about PASA's work at pasafarming.org. We are honored to host this event today in partnership with Senator Vogel, Chair of the Senate Agriculture and Rural Affairs Committee, and Darrin Youker, Policy Director at the Pennsylvania Department of Agriculture. We also work closely with Adrienne Nelson of National Young Farmers Coalition to develop the content for this event. So I'll let my co-presenters introduce themselves during the presentation, but again, we are very grateful for the time and expertise of Senator Vogel and Darrin Youker today. I am Lindsay Shapiro, PASA's Farm Bill campaign organizer and a first-generation veggie farmer in southeastern PA. So as I'm sure you already know, we are here today to discuss PA's Beginning Farmer Tax Credit, a law that passed in 2019 designed to incentivize the sale and lease of land and assets to beginning farmers. So today's webinar is a bit of an experimental format for us. During the first half, we'll provide an overview of the program and then transition to a candid conversation about how this program is currently working and also how it can be improved. So your feedback is really critical to making the Beginning Farmer Tax Credit even more effective, so please don't be shy. And if you'd prefer to share your thoughts via email instead, that's certainly welcome, and you can do so by emailing policy@pasafarming.org, and I will make sure to drop that into the chat. So here's a brief rundown of today's agenda. We'll start with a little history of the bill and some background with Senator Vogel. Darrin Youker will then discuss accessing the tax credit. He'll then hand it back to me to go over some comparable state level legislation. Both Minnesota and Ohio have beginning farmer tax credits. And so we'll look at how those differ slightly from the way Pennsylvania's is modeled. If there's time, I'll plug a few other federal land access initiatives that are relevant to our current farm bill discussions. And then we want to make sure that we spend a good portion of today's presentation having discussion and question and answer. So as we get to that portion of the presentation, I will go over kind of what that will look like in terms of the logistics of raising your hand and coming off mute and how we're going to try to coordinate that discussion in this virtual setting. So with that, I'll go ahead and hand the floor over to Senator Vogel.
Thank you, Lindsay. Good morning, everyone, or afternoon, I guess it is now. Good afternoon. Thank you for having me on your program here today. Obviously, I want to discuss the Beginning Farmer Tax Credit. A little bit of information about me. I'm a fourth-generation farmer. We had an active dairy farm until December 16 when my dad passed away. My mother sold the cow. So my wife, Sue, and I, we still do crops on our farm in Beaver County. We have 370 acres. We do hay, corn, and soybeans on right now in Beaver County. I've been a state senator now for my 16th year. Hard to believe it's been that long, but I don't know how long I've been chairman of the Ag Committee, probably for 13 or 14 of those 16 years, probably. But I enjoy the job. Obviously, Senate agriculture is what I like and enjoy. And the history of the bill, clearly, I was reading through a farm magazine. I stole the idea from Minnesota. I'm not going to lie. We took the idea from Minnesota. I read it in one of the farm magazines, Successful Farming, whatever I was reading one night, and saw it and brought it in here and tweaked it. And I realized, growing up on a farm my whole life and being active in farming, that there was the disparaging problem with young farmers being able to get started in farming. And the joke always was, you either marry a farm or you inherit a farm. That's the only way you get a farm. And so I wanted to try and do something because Pennsylvania had so many farms. I knew we were losing farms just because of people not having access to be able to get ground to farm. And so that was the impetus for the whole bill and getting the act signed in 2019 and the law and everything. So I think it's worked. Obviously, we're working on a few tweaks right now. We've been working with the Secretary of Agriculture and Department of Agriculture on and also the Department of Revenue to tweak a few things we found as it went along. There's a few things that are working and aren't working. There's a couple of amendments we're working on, and maybe Darrin will touch on them a little bit more here in a second. But it's working well overall. I think we've got like 50 or 60 people that have applied so far, I believe, to use the program. And so hopefully these few tweaks we can make will make it a little bit more user friendly and be able to get more people involved in using the program, because obviously you're the next generation of farmers. We want to make sure that you have the ability to access a farm, or the ability to farm, and however, whatever that looks like in your future, whether it's a small acreage or whether it's a larger crop farm or something like that. So, or a dairy farm. So that's basically where we're at, and I'll be willing to take some questions later on. So at this time, I'm going to turn it over to Darrin Youker from the Department of Ag. So Darrin, go ahead.
Thank you, Senator. Really appreciate it. This bill is it's personal to me, in that Senator Vogel and I worked on it hand in hand while I was working for an ag trade organization prior to joining the department. So making sure that this functions to its desired intent and is capturing a wide of a net as possible to assist young and beginning farmers is certainly something that we are keenly interested in. As the senator said, we are thinking about making some tweaks and changes to make sure that we can even grow its utilization, and really would appreciate some feedback that you might have personal experience on at the end of this. So if we could advance maybe to slide number 10, and we can discuss how the tax credit works. I think it is just important to note that this tax credit passed in 2019 unanimously. And it was not part of any other kind of budget or related bill. It passed on its own unanimously. And that is a testament to the belief that the Senate and the administration had at that time that this was the right thing to do to help beginning farmers. And, while there's a lot of legislation that is passed on a bipartisan basis, not all of them are. So I think it is really important to note that, this had really strong support in the General Assembly. So, we'll say from the outset that the Department of Community and Economic Development is the one that really kind of runs this program. Our involvement is a little bit on the kind of on the behind the scenes basis, but obviously we've got a very vested interest in how this works and operates. And then anything that is a tax credit related obviously lives with the Department of Revenue. But at the outset, there's a couple of things that the beginning farmer has to do, and then that the asset owner has to do. And it starts with the beginning farmer deciding that they want to go into some type of business venture, whether it's buying a farm or leasing it. They have to become a certified beginning farmer. And we're going to get into the certification process in just a second, but that is a critical step. If missed, the asset owner cannot claim the tax credit. So the work on the front side has to be the beginning farmer becoming certified. And so there's no reason to wait. If it's something that you're interested in doing, you can go ahead and do it now, even if you don't think that the next year I'm going to be making some type of purchase or rent, because you always can get yourself recertified. But if an opportunity presents itself and there's a lot of other things you got to worry about, it's just better to have that certification tucked into a folder that you can access. Next step, obviously, is you as the beginning farmer have to work out the sales or lease agreement with the person that you're looking to purchase from. And it can be land, can be equipment, or can be other agriculture assets. That's when the agriculture asset owner, after all that agreement is in place, they then have to track the tax credit through the system by making an application through DCED, getting the approval, and then making the claim on their tax return. And I think it's important to note that the beginning farmer does not get the direct benefit of the tax credit, but what they get is the benefit of becoming a more attractive applicant if there is a competition for land or equipment between an established farmer and a beginning farmer. In that, the asset owner is able to receive a tax credit by working with you as the beginning farmer that they wouldn't be able to work with another producer. So that is the benefit that comes to the beginning farmer. If you could go to the next slide, please. So one of the things that this program wants to do is make sure that we are hitting the classification of people that we're looking to help. And you will see that both on the beginning farmer side and then the owner operator side. So one of the things that we want to do is make sure that the person that is becoming a certified beginning farmer does have some type of transferable experience. It could be experience growing up in the family business. It could be an apprenticeship program. It could be the appropriate, college or technical skills, but something that says that the person that is seeking certification does have some experience that is then going to translate into a successful farming enterprise. And most importantly, we want to make sure that we are not providing any kind of incentives to folks that have been in the business of agriculture for a long time. So we are looking to help individuals that have not applied for federal gross income or filed Schedule Fs for more than the most 10 recent taxable years. And again, we're looking to, that's the kind of group of people that we're looking to lift up through this particular tax credit program. Important to note, there's not an age limit. So it's not just for folks that are 40 years and younger. You could, transition out from a business at the age of 50 and become a beginning farmer that could take advantage of this particular program. Again, just some guide rails on the program. We obviously want to be working with individuals that intend to farm in the state of Pennsylvania. Again, just to underscore the importance that you need to become a certified beginning farmer in order to work with an asset owner that will then be able to take advantage of the tax credit. And the other thing is just, these are just some protective guide rails for the state, that we're not talking about a transaction that happens between spouses or business partners. We really want this to be a next generation or, a beginning farmer that is working with an ag asset owner, and intends to file, go forward with a business as opposed to maybe finding a loophole that they can take advantage of the tax credit. And this is a contact for the Department of Community and Economic Development that does a lot of the work on this particular tax credit. And I will say that the Department of Community and Economic Development's website is fantastic. They have got an extensive guidelines that is a PDF that you can easily download. So you can read through that. It gives a lot of great context, and then also has all of the application forms that you would need. This is just a copy of the certification form that you as the beginning farmer would need to fill out, looking for experience, looking for some type of business plan, and also just certifying that indeed you meet the criteria of a certified beginning farmer. So the certification is valid for 2 years. Again, that's why we like to underscore that if you're thinking about doing something in the next year or two, just go ahead and do the application process. It's a free application. You'll get a fairly quick turnaround, but then you're ready to go with full assurance to the asset owner that indeed you meet the criteria of the program. There is a recertification requirement. This is particularly important for if the asset owner is going to be claiming a tax credit on the leasing side of things. So one of the things that DCED is going to be looking towards and looking at us for perspective is, does the individual who is applying to become a certified beginning farmer kind of have a business plan in mind? And again, I think we're just looking for some type of proof that either one, you've been involved in the business of ag for a couple of years and are looking to make a next step, or that you have got some type of, business plan, profitability statements, all of those kind of things. Or if you have been somewhat involved in agriculture and do have, livestock contracts or dairy paperwork or receipts, just to show that there has been some thought behind becoming a certified beginning farmer. Again, just sort of protection that we are working with the types of individuals that this program was intended for. Again, and Department of Community and Economic Development and Ag is certainly more than willing to help you kind of walk through what type of proof or justification that we would be looking for. Now, after you become a certified beginning farmer, this is when you work with the asset owner who will then be taking advantage of the tax credit. So there's some eligibility requirements on the landowner side of things. Again, these are more just kind of like protections for the state issuing a tax credit. So we want to make sure that one, the asset owner does actually own the land which they are going to be selling or leasing, or the piece of equipment that they're going to be leasing or selling. They have, in order to claim the tax credit, they have to show demonstrable proof that they have sold or leased to a certified beginning farmer. They have to be subject to personal income taxes, which most of us are, state level. And then very important, and again, matters only for the asset owner, that they are up to date on all of their taxes. The Department of Revenue is not going to issue a tax credit to somebody that is behind on their taxes. So there's two basic ways that somebody can receive the tax credit. One is for the sale of property, and that is going to be a 5% of the lesser of the sale price or fair market value up to a maximum of $32,000. Again, that is for the sale of land or equipment or other items. And then the other is a maximum of, $7,000 over a 3-year period, so $7,000 over 3 years for leasing. That tax credit cannot be carried forward. And so again, that's one of those that the asset owner has to apply the value of that tax credit to their current taxable income when they file. So multiple ways that multiple steps that the owner application has to take to be able to obtain that tax credit. One is making sure that they are working with a certified beginning farmer, and that's where, from your perspective, important to get that paperwork done ahead of time before you ever go to the negotiating table with the asset owner. And then for tracking purposes, the department likes to see that just a notification of whether this is a transaction between family. Have to, again, provide certification that that this is a transaction with a certified beginning farmer. So that certification copy has to then be transferred over to the asset owner who is applying. Then going to need some legal descriptions about what type of transaction took place, so whether it was a lease or a sale. Is there a signed lease? Is there, side purchase documents, mortgages, all of those kind of things. That's the type of documentation that the asset owner is going to need to be able to get the full value of the credit. The asset owner is going to have to show that they are still involved in the business of agriculture. And frankly, that's one of the things that we are looking to potentially change in this tax credit, so that maybe somebody who is retired for several years, or maybe a family member that is inherited a farm, but that does not intend on farming, but wants to see the land still stay in agriculture, could qualify for this particular tax credit. But as it stands right now, the asset owner has to be able to show Schedule F tax returns that they are still making the majority of their income from farming. Several other affirmations that have to be made in the application. Again, this is on the owner side of things. Name of the certified beginning farmer, when the date happened, type of legal description and documentation, payment details, making sure that there are signatures. Again, these are just guardrails to make sure that the tax credit is going to the appropriately intended target. And just to reiterate the importance that the asset owner has to be current on their taxes. There's ways that they can work through what's called state tax compliance clearance. But again, I'm sure most of us can appreciate that the Department of Revenue does not want to be providing a tax credit to somebody that might be behind on their taxes for a couple of years. After the application is approved, the asset owner then has to actually apply for the tax credit. And then we certainly would recommend individuals that are working through this to use their tax preparing professionals for this type of service, just to make sure that everything is the documentation is there. So a scenario could exist where the certification from the department comes in a little bit later than the April 15th tax deadline. If that case happens, you can always file an amended return or seek an extension. And lastly, before turning it over to Lindsay, I just want to talk about two other opportunities that do exist for beginning farmers that were also included in major legislation back in 2019. So many of you might be aware, Pennsylvania adopted what is called the Pennsylvania Farm Bill. So that is some state-specific things that we and the General Assembly put together to make sure that we can continue to help production agriculture grow and flourish. One of those is farm vitality grants, and that is to help farms that are in transition. And that transition could be from one generation to a next, or it could be the development of a new business plan. It could be looking to get into the business of agriculture for the first time, and you need help putting together a business plan or a profit and loss statement, or do a quick market study. So farmers in those cases can apply to the Department of Agriculture for a farm vitality grant. You're eligible for up to $7,500 in grant reimbursements for professional services from accountants, business consultants, things like that, but basically to help you make that transition of whatever that might look like. The other is there is a realty transfer tax exemption available to beginning farmers who are purchasing, and I want to underscore that, purchasing preserve farms. So we obviously know the state leads the nation in number of preserve farms. We're also a nation leader in the number of young and beginning farmers. So the thought was that we could help those preserve farms transition from one generation to the next. The certification process is separate from the beginning farmer tax credit. but they're looking for some of the same metrics, including that you've been involved in the business of agriculture, filing Schedule Fs for less than 10 years. But if that is the case and you're seeking to buy a preserve farm, you can qualify for the realty transfer tax exemption. And that tax exemption is something that both the buyer and seller have to pay during a real estate transaction. So it could be a valuable cost savings for you. So more information can certainly be found on the Department of Agriculture's website about the realty transfer tax exemption. So with that, happy to answer questions at the end, but want to turn it back over to Lindsay.
Thanks so much, Darrin. I appreciate you walking us through all of those pieces of the program. I just want to reiterate that in my conversations with Christine Jacoby from DCED, she really emphasized that she wants to be a resource for folks that are interested in becoming certified beginning farmers in order to take advantage of this program. I know some of the application requirements around profitability and business planning can seem a little daunting. But in my conversations with Christine, she reiterated that she is on hand to help folks navigate those portions of the application and work with you to make sure that you're able to provide the relevant and necessary documentation. So if the thought of trying to pull those pieces together seems a little intimidating, I just want to reassure you that there is support from DCED and from the Department of Ag and from PASA even to kind of help you navigate some of these challenges. So as Senator Vogel mentioned, the Pennsylvania legislation is actually modeled after a Minnesota bill. And since Pennsylvania's passage, there's also been an Ohio beginning farmer tax credit. And so kind of to help us frame our discussion later, I just wanted to take a look at some of the provisions in those comparable pieces of state legislation so that we can think through whether there are elements of those bills that could be attractive to Pennsylvania beginning farmers. So we're going to start first with the Ohio Beginning Farmer Tax Credit. This was passed, I think, in 2022, so it's still a relatively new program. In the Ohio program, beginning farmers receive a tax credit for the cost of a financial management program. So what that means is you can apply for a tax credit to get reimbursed for the cost of attending a farm business planning course. So it's not kind of there's limits on kind of what the tax credit looks like in terms of the beginning farmers end for the Ohio program. Another difference to note about the Ohio tax credit, in order for land to qualify as an agricultural asset, it must total at least 10 acres or produce an average annual income of at least $2,500 from farming. So there's no Schedule F from the asset owner required. As Darrin mentioned, that's something that that's something that there's conversations around potentially changing. And just wanted to note that in Ohio, they tried to put some guardrails in place in terms of who is selling the land, but it's a little less restrictive than the way that the Pennsylvania law is currently written. And so again, here's the Minnesota Beginning Farmer Tax Credit, which was the model for the Pennsylvania law. So from a 2019 Young Farmers Talking Point, allegedly, there was the program in Minnesota facilitated over 400 transactions between asset owners and beginning farmers. That law was passed in 2017. So, 400 transactions over the course of 2 years. I think this Talking Point document was put together in 2019, is, a pretty impressive number of folks that are utilizing the program. And then in Minnesota, you may claim the tax credit for as many years as the beginning farmers they work with are eligible. So what that means is if you are leasing land to a beginning farmer, you can claim the tax credit as long as the person that you're leasing land to still qualifies as a beginning farmer per the Minnesota rules. And I will say most of the comparable pieces of legislation define a beginning farmer very similarly. And in Minnesota, similar to Ohio, beginning farmers can receive a tax credit for the cost of a farm business management program. And then Minnesota, it is a non-refundable credit. as it is in Pennsylvania, but it can be carried forward for up to 15 years. So any credit that is not utilized in a single tax year can be applied to future tax liability up to 15 years, which I think like the Pennsylvania REAP program, I don't know these details off the top of my head, but I think that is a tax credit that can be carried forward as well. So, but the beginning farmer tax credit in Pennsylvania cannot be carried forward. In Minnesota, there's no mandate that a farm be a certain size or that an asset owner be engaged in farming. So the pool of agricultural asset owners in Minnesota is significantly broader than it would be here in Pennsylvania. The Minnesota Beginning Farmer Tax Credit also has a subcategory for emerging farmers. So credits for farmland sales will be 8% of the sale price for all beginning farmers and 12% if the buyer is also an emerging farmer. And Minnesota defines emerging farmers as women, veterans, person with disabilities, American Indian or Alaskan Natives, members of a community of color, young being 35 and younger, LGBTQIA+, urban, and in Minnesota, urban is in a city with a population of over 5,000, and any other emerging farmers as determined by the commissioner. So in Minnesota, it's there's kind of an additional incentive for selling not only to a beginning farmer, but a beginning farmer that fits within this emerging farmer definition. So here are some of the main takeaways to touch upon again. So Pennsylvania's law is the most narrow in its definition of an eligible asset owner. As Darrin mentioned, the asset owner has to be engaged in farming. They have to derive the majority of their income from farming as reported on a Schedule F. That structure is not replicated in these other laws. Again, Ohio and Minnesota both have this compensation for beginning farmers built into the piece, so the tax credit benefits the asset owner, and it also is somewhat designed to benefit the beginning farmer. As someone who has taken a financial management class in order to get an FSA microloan, I will say I'm not sure how generous of a perk it is to get reimbursed for a financial management class, but that is my own opinion, not that it passes. Tax credits awarded to landowners who rent do not seem to require a minimum lease agreement. When I was reading through some of these other laws, I was struck with the fact that for people who are claiming the credit that are renting to beginning farmers, there were not a lot of guardrails in terms of making sure that those landlords had kind of responsible lease agreements with the beginning farmers. So that was just something else that was notable in reviewing these other pieces of legislation. Okay, so I want to take just a very quick moment to talk about some federal land access initiatives. As I mentioned, I'm PASA's Farm Bill person, so I always kind of like to talk about the federal landscape when applicable. And I'm going to breeze through these next slides because I want to make sure that we have plenty of time for discussion. So I realize that I am preaching to the choir here, but this is just a little framing to help us grasp the significance of effective land policy. So currently, seniors age 65 and older own more than 40% of the agricultural land in the United States. So this suggests an impending transfer of more than 370 million acres of farmland in the next 2 decades. So the numbers of farms lost between 2017 and 2022 is sobering. In Pennsylvania, we lost 7.7% of our farms in that time span. So the 2022 Ag Census shows that if we do not create strong incentives to keep farmland in agriculture, we will continue to lose farmland at an alarming rate. At PASA, we believe that keeping farmland in agriculture is essential, but we don't want to stop there. Ideally, we'd like to see that farmland managed in ways that prioritize ecological health, and we'd like to see that farmland stewarded by farmers who have been historically underserved, ignored, or marginalized by existing agricultural policy. So again, because I'm PASA's Farm Bill nerd, I want to take a few moments to look at some initiatives on the federal level that advance that agenda. The first bill that I want to touch upon is the Increasing Land Access, Security, and Opportunities Act. The acronym is LASSO. And this bill would authorize and expand USDA's Increasing Land Capital and Market Access Program. That was a pilot program that the USDA launched, I think, in 2022. And it was just a one-time thing, but the LASSO Act would authorize that program permanently with an annual budget of $100 million per year. So there's a little more information in the slide deck that was shared. You can find the one-pager, and there's also a call to action in the instance that you're really excited about the LASSO Act and want to send a message to your Congress people. The LASSO Act is one of the key priorities of the National Young Farmers Coalition, and it's also being heavily championed by American Farmland Trust. The Farmland for Farmers Act was one that was brought to our attention recently by the National Family Farm Coalition. And the purpose of this act is to try to limit the corporate ownership of farmland. So to the way that the bill is written, it would become increasingly difficult for corporations, both domestic and foreign, to purchase farmland and hold it as an asset versus having it be used as farmland. So just two more bills that I want to touch on quickly. The Farmland Access Act tries to improve what's called the buy, protect, sell mechanism, where land trusts purchase farmland, place an easement on the land, and transfer ownership to a farmer and rancher who can maintain the land as a working farm. So that mechanism is currently kind of clunky and underutilized, so the Farmland Access Act works to try to improve that. The Farm Transitions Act of 2024 would, for the first time, stand up the Commission on Farm Transitions to study the issue impacting the transition of agricultural operations to the next generation of farmers. So that's kind of a little glimpse into how these conversations are taking shape on the federal level in the ongoing Farm Bill debates. And because we created the most text-heavy slide deck imaginable, I decided to close things out with a picture. So this was a lobby day for the beginning farmer tax credit back in April of 2019, coordinated by Adrian and Karen of the National Young Farmers Coalition. They brought a group of young farmers to the Capitol to talk about the importance of land access. And I am the one in the jaunty scarf. So with that, I want to move on to the discussion and question and answer portion of our event today. Let's see. Many of our events may have been put together a quick guide of how this is going to work. So you can use the chat and continue to use the chat to ask questions. Thank you all for being so active in the chat already. And then you can also request to be unmuted. That's at the bottom of your screen. And then go ahead and raise your hand. I'll call on you, May will unmute you, and then you will be able to talk. The hope is that we can try to coordinate a conversation that is productive, but not confusing. So this is the goal. And why don't we start actually by answering the first question that we have in the chat here from Rosie. It says, please clarify what data PA leads the nation in young and beginning farmers. And I want to toss that to Darrin, because
happy to answer that. That is something that was in the most recent agriculture census. I don't have it right in front of me that I can put into a chat, but we historically have led the nation in the number of young farmers under the age of 35. So some of that might be attributed to our Plains Tech community, but still it's certainly something that is a source of pride for Pennsylvania agriculture that we lead the nation. Now, that doesn't underscore the fact that agriculture broadly is an aging demographic, but at least we're making efforts here to continue to sustain the next generation that is looking to get involved in this industry.
Great, thanks so much. Maeve, can you go ahead and advance the next slide, and we'll look at these discussion questions here. Okay, so I want to start with the first few questions. What were your initial takeaways? And Have you considered participating in the program? If so, what was your experience? If not, why not? And I want to start with also Russell's question in the chat. What would the timeline be for PA amending the current rules to make them more similar to Minnesota or Ohio? And I'm wondering, Russell, if you could come off mute and talk a little bit about what it was about those rules that was appealing to you, and then we can address this other question about what the timeline would look like.
Sure. Can you hear me okay?
Yes, thank you.
Yeah, I think the one in particular of the landowner having to be getting most of their money from farming and filing a Schedule F recently. I've been looking for land for about 2 years now, and a lot of it is usually someone who just has extra land and they themselves are not necessarily a farmer. And so that just really limits the amount of land that's available for this tax credit. So I guess that was one thing in particular that I thought seems like an easy enough change, but would be pretty impactful.
And Darrin or Senator Vogel, would you want to speak to the second half of the question about kind of what you see as a timeline for when some of these changes could potentially be implemented?
Happy to defer to the senator first, and then I can kind of fill in at the end.
Thank you for tossing that to me, Darrin. I don't have a timeline right at this point in time. We're still working with the Department of Ag to get the changes clarified and written into a legal language, I guess, so we can put an amendment together. I haven't heard anything as far as a timeline. I can't say for sure when it would possibly be. Hopefully sometime yet this year, so it could be implemented for next year's tax credit program for next year's taxes. But I don't have a timeline at this point in time. I just have one other quick question. Russell, what part of the state are you looking to get land in? You in the southeast here or somewhere? What part of the state are you in, if you wouldn't mind asking?
I'm in Western Pennsylvania, but I've been looking pretty much anywhere.
Okay, just curious. Thank you.
And just a little bit further on timeline, I'd say we agree with the senator. This is something we'd like to try to get addressed this year. And hopefully get it finalized so that these changes can be included in for when folks are filing their taxes for next year. So we and the senator are going to be working pretty closely together on trying to come to some agreed to language on changes like what was just mentioned.
Thanks, Darrin. And I'm going to actually pull a question from the chat and throw it to you. Within Pennsylvania, is there a primary department engaging in outreach to inform beginning farmers and landowners about the beginning farmer tax credit and the realty transfer tax exemption? I know the Department of Ag is very invested in this program and making sure that beginning farmers are aware of it and that it's working for beginning farmers. So if you could, kind of speak to how the program is promoted.
Yep, that's certainly something that does fall to us, mostly through, kind of social media outreach, but opportunities obviously exist for us to be talking about these programs at farmers events. Our secretary is on the road, I'd say more than he's in the office, and I know he is talking frequently about programs like this and others that the department operates to, help production agriculture. And then frankly, we rely on partner organizations like PASA and Farm Bureau and Young Farmers Coalition, and we try to share resources as much as possible just to make sure that folks are aware that this program does exist.
And I will also note that this webinar is being recorded. So if you found the explanation of the program useful and the description of how one goes about applying for the program, you are more than welcome to share it with the beginning farmer that you think may be interested in applying. So, and it will be made available on the PASA website as well. So just one more small resource to make sure that farmers are aware that this program exists. I want to draw our attention to a comment from Lindsay in the chat. And Lindsay, if you feel comfortable coming off mute to discuss it in a little more detail, I think that would be helpful. But you note that many beginning farmers need to maintain off-farm jobs to get started. So the rule around majority of income from farming to qualify to become a certified beginning farmer can be a barrier for folks that need to sustain their their families and their lives with off-farm income as they're starting out. Lindsay, did you want to add to that a little bit?
Yeah, sure. Definitely comes from personal experience. I work a full-time job for PASA, so I'm very lucky to have that job, but I've also been trying to get my farm off the ground, and that would not be possible without an outside income. So I just can't imagine that we're defining beginning farmers as already making a living off of their farming. It's just, yeah, that just seemed like a huge barrier that I would definitely love to see change in Pennsylvania. I understand requiring some evidence of farming, some Schedule F, but it being the majority of your income seems like a huge barrier.
Yeah, really appreciate that perspective, and certainly one that we have noted too as we think through this particular program. Of course, our concern is just making sure that there's appropriate guardrails in place so that somebody that is not in the business of farming can't take advantage of this particular tax credit. But certainly something that we're trying to think through in real time about how to potentially wordsmith it so that we can help people that have a full-time job but are trying to actively build their farm business, but again also make sure that somebody can't take advantage. The last thing that we want to see is this tax credit go to individuals that have no desire to be in farming but just found a way to maybe take advantage of something. That's obviously not what any of us want to see.
Thanks, Darrin. Thanks, Lindsay. And speaking of, while we're on this subject of guardrails and making sure that the program is intended, working in the way that it's intended, there's a question in the chat that says, do you see any downsides from Ohio's version that doesn't require a Schedule F from a landowner, or Minnesota's version in which there's no mandates regarding having kind of a background in farming for the landowner? Can you speak to what you think the right balance might be for making sure those guardrails are in place, but not having the program be too limited?
Yeah, I'll give the department's perspective. Then, if Senator would like to weigh in, I can kick it over to him. But I think particularly from the individuals that are looking to lease or sell farmland, there is definitely interest in making sure that that a wide variety of individuals who have land that no longer want to or can farm it can then qualify for the provisions of this particular tax credit. So I think we're certainly concerned on the beginning farmer side that, again, we're working with folks that intend to be in the business of agriculture in some capacity. But if a scenario exists where somebody inherited farmland that they were never involved in the day-to-day production on and did not want to continue it as a business, but don't want to see it go out of production, then certainly that individual should be able to qualify for a tax credit.
And I would just sort of kind of add to follow up to that same thing. When we did this in 2019, we knew there was going to be changes made in the future. Probably, obviously, you do something, there's always down the road a couple of years to see how it works, and you address amendments to change things. And we these are part of the questions and stuff that we're getting more and more, because more people right now are in the process of, they inherit farmland from their parents or something, live out of state someplace, but they want to see it maintained as a farm, but they don't have, like I said, Schedule F in their possession to be able to do something. So that's some things that we're looking at doing as well. We want to make this as useful a program as we can to as many people as we can. And just to Lindsay's question as well, there are many farmers that have farmed for many, many years whose wives or something still work off the farm to have insurance for the farm as well. So your situation isn't, unique, Lindsay, at all, because many farmers that have farmed for 30, 40, 50 years still have their wives or something, or they themselves have another part-time job off the farm, so they have insurance or just a little extra added income as well. So it's a tough road. There's no doubt about it. To be a full-time farmer is not for the faint of heart, believe you me.
Great. And thank you all for keeping the chat going with some really thoughtful questions. And again, if anybody wants to come off mute to weigh in on any of these conversations, feel free to just raise your hand, and Maeve can help you get off mute. I want to address this question of the tax credit for the beginning farmer. Darrin or Senator Vogel, I'm wondering if you could provide a little bit of background, or kind of where the thinking is at on what that sort of change to the program could potentially look like. As I mentioned, in Ohio and Minnesota, the tax credit for the beginning farmer just goes towards reimbursement for those financial management programs. And so if you could give us a sense of what something in Pennsylvania could look like?
I certainly think we're open to a lot of different ideas and thoughts about how we might be able to provide some type of further incentivization that would live with the beginning farmer. And certainly would be love to hear perspectives from folks that are, trying to enter the business and get a sense of what they might see as a potential to barrier to entry. But I certainly see a lot of merit in trying to find something that is then going to have a direct tangible benefit to the beginning farmer.
Great. And if there are any beginning farmers on the call that want to, again, come off mute and talk about what that benefit might look like for them. Yeah, very grateful for those insights. I see Noah with their hand raised. So Noah, why don't you go ahead and.
Thanks, Lindsay. No, it's really just to echo, I think, what a couple of folks have said in the chat, just to elevate those voices, and some of what folks have already shared about the income requirements for both the owner and the beginning farmer. I think it's something like 90% of farmers have off-of-farm income these days. So I think there's ways to give DCED more discretion about defining what significant income means, avoiding that majority word for income to allow the flexibility while still putting those guardrails that Darrin mentioned about making sure the tax credit's going to folks that we want it to go to. And I think there's a lot of grant programs that give the departments quite a bit of discretion about defining eligibility, just to strike that balance a little bit better. But thanks so much for the space.
Message received loud and clear. Thank you.
Thanks so much, Noah. And there's another question in the chat here. Is learning about this tax incentive included in the process of preserving farmland in Pennsylvania? And I think that gets to some of these ongoing questions about having this really great program in Pennsylvania that is not currently being utilized to its fullest potential, and thinking through what it could look like to just get more people involved in this program. And so I think, Pennsylvania FarmLink is helping folks understand this program. And I think there could be a role for lenders to potentially help people better understand this program. And, a lot of the different stakeholders that are involved in the transaction of assets, particularly land. So yeah, those are two, FarmLink and lenders are two places that we've been thinking about making sure that those conversations are happening. Darrin or Senator Vogel, if you have any other thoughts, please, hop in.
You hit one nail on the head that I just did want to share real quick, is that, certainly we do talk with lenders that are involved in agriculture banking, but I think just, again, reiterating that these programs are available. I'm particularly thinking about the realty transfer tax exemption, that, that's something that's going to affect the bottom line of the cost of, your mortgage and your overall lending package. So yeah, good reminder that we have further outreach to do, I think, particularly with those that are helping to do these types of transactions.
And also, just to want to add quickly, one other group of people to look at are your ag attorneys. So many attorneys that do wills and estate planning and things like that, they're available as well. And I'm sure they have the information. I know there are several in Lancaster County, I know of for sure, that do that kind of work, and they have the ability and they have the information in their hands to be able to. I know one attorney in particular has done several of these beginning farmer tax credit transfer programs with people. So don't be afraid to ask your attorney or your farm attorney or somebody that's done maybe a will or something for your estate planning for your farm, to ask them to ask around for other attorneys and things like that might be able to assist you as well in being able to come up with, a program to do this on your farm as well.
Thank you. And I want to make sure that we get this question from Rosie answered as well. The question is urban farming included in the tax credit? Is urban farming eligible for participation in the beginning farmer tax credit program? And I think the answer is yes, but it is a little complicated by the fact that the land has to be, as the law is currently written, has to be kind of actively farmed. And so, in an urban setting, there's just less opportunities for a land that's currently in ag production to be sold or leased to a certified beginning farmer. you know, it's more often instances in which land that was had some sort of other use is being converted into farmland. So I think it's a yes with an asterisk. But Darrin and Senator Vogel, please feel free to hop in if you have any other clarifications to note there.
Sure. Yeah, no, just to, as a reminder that agriculture asset is fairly broadly defined in the tax credit legislation to include livestock facilities, machinery, things like that. So, you know, if an urban producer is buying a piece of equipment from somebody else who is involved in farming, then that, you know, that individual that sold the asset then is available to claim a particular tax credit. And then just, you know, I'd be remiss if I did remind folks that the department does have an urban agriculture grant program that was created as part of the 2019 Farm Bill. And so details on that are also available on the department's website.
Great, thank you so much. So we are coming up to the hour mark here. So I want to make sure that I bring people's attention to the survey link that was dropped into the chat. Those evaluations are really important in terms of you know, developing the programming here at PASA and making sure that we are providing information and content that's useful for folks. So if you have the time, really encourage you to fill out the evaluation there. Especially since this was kind of a new format for us, you know, extra please fill out the evaluation with this kind of hybrid info session, listening session, virtual thing that we did. And I also want to make sure that give an extra special thanks to Senator Vogel and Darrin for taking time today to discuss this program, hear feedback about the program, and you know, we're just really so grateful for your partnership here. And then I want to just give both of you a final moment to share some parting thoughts, and then we'll wrap things up.
Sure. I just really appreciate PASA putting this together. And the timing of it is great as we are thinking about ways that we could improve this program. So the feedback and some of it have been loud and clear and very consistent that we can start working on trying to get some of these changes implemented. But thank you very much. And thank you for being interested in agriculture. We need more of you.
And I would just sort of kind of like to reiterate what Darrin just said. Yeah, thank you very much for having us on today. I appreciate the opportunity, and I appreciate PASA being another outlet to get this program out in front of people and be able to bring it to their attention. It is available, and what is available to farmers in the PASA world to be able to take advantage of these programs to possibly come up with property of their own to have a farm someday of their own. So I want to thank you all very much. Thanks you, especially Lindsay, for doing this. And any other questions or concerns you have, you can please feel free to contact me at my office here in Harrisburg, or like I said, contact Darrin at the Department of Ag, and try and answer your questions. And once we find out what the amendments are going to be and stuff, and now we can let you know what the changes are going to be when they're finally implemented and passed in the law again and stuff. So we'll be willing to let you know what the changes are so you can pass them on as well. So thank you very much again. Thank you.
All right. Thank you all. Have a great afternoon.
Have a wonderful day, everyone.